Hardik, I have joined. Huh? Hardik? Atif?
Yeah, Ashish, I can hear you. Yeah, I noted.
Let me know when to start.
Yeah, yeah. Good evening and welcome, Mr. Gupta. We are a couple of minutes away from starting. I will let you know when to start.
Hello.
Good evening, Mr. Gupta. We'll
Good
just
evening.
start in a couple of minutes.
Sure. Go ahead. I'll just complete something in the meantime.
Perfect. Thank you, sir.
Mr. Gupta, you may want to choose to mute also. Meanwhile,
Yes, I will.
thanks. Uh, Hi, Ashish. I think we can just get started now. It's 5:30, and it will, the numbers will just slowly start increasing. So, over to you.
Yeah, just give it a couple of more minutes because people are still logging in.
Yeah. So, RA is also joined.
Raamdeo ji also.
Hi, Ram.
Hi Akhil, how are you?
Yes, sir. All well.
Very well.
Great.
So
So we are
congratulations.
about to start, sir. So I'll just start it because it's already past 5:30.
Please do.
Yeah, Ashish, please start.
So, good evening, everybody. It's always a pleasure to welcome you on our webinars, and this is a very special one which we conduct. It's called the Vantage Series Masterclass webinars, and as part of these webinars, we normally host business leaders, promoters, and try and give you real actionable insights for your business, for markets, and many other spheres in life. Today, we have an extra special guest, Mr. Akhil Gupta. He's a chartered accountant by profession. Later on, went on to complete his advanced management program from Harvard Business School. But more importantly, he's been at the epicenter and he's been part of the core team of a story which is just exponentially exploded in India and has touched, I can comfortably say that it has touched all our lives, billion lives. And we are seeing probably, I don't know, phase 3, phase 4 now of this story. And it's been at the epicenter of the COVID pandemic as well. I mean, this is an industry which is, in a sense, got a new engine of growth, and we are in the digital era, and this business is at the backbone of the digital era. Now, more importantly, he's recently published a book called "Some Sizes Fit All." Now, I went through this book, and let me tell you, I had wish, I'd read a book like this maybe early on in my career. According to me, this is a master blueprint for businessmen who are at the startup stage, people who are trying to scale up, people who are running large enterprises, and at the same time, for professionals like me, some of the insights that he's provided in the book are invaluable. And really happy to be in conversation with him today. Joining him is our co-founder, chairman, and he's known as the Buffett of India, Mr. Raamdeo Agrawal. He's seen this story from very, very close quarters. And normally, whenever we have discussions on markets, one of the stories he talks very, very fondly about is Bharti. And he talks about this entire journey from 2002 to where it is today. I mean, it's a 3 lakh crore plus market cap enterprise. And Mr. Gupta has cited many case studies from his Bharti scaling up days in this book, which was very, very useful. So what I'm going to do is I'm going to pose some questions that I had from the book to bring better understanding on some of the concepts that he has explained. And then, of course, I'll hand it over to the two wise people on this webinar to converse, and I'm sure all of us will, get lots of wisdom from their conversation on how is the story going to unfold going forward. So, Mr. Gupta, welcome to this webinar. And also a warm welcome to all our clients and also people who are watching us on the live YouTube stream. So thank you for joining us, on a weekend, Friday evening. Mr. Gupta, very warm welcome to this webinar.
Thank you. Thank you very much. Thanks, Ashish. Very kind words. All I can say is Ram and I go a long way. Ever since the telecom revolution in India started, I think I've known him since mid 90s. So we safely can say we both belong to a mutual admiration club. I have very, very high admiration and regard of what you guys have been able to do. So it's a special honor and a privilege for me to be on this webinar, which is organized by Motilal Oswal, and particularly you and Raamdeo and your colleagues are personally present here. Thank you very much for this honor.
Right. So let me start by quoting, the chairman of Bharti. I mean, he's written, I think he summed it up very well. After I read the book, I understood what he said. He said, this is an Akhil classic and everybody must read it. So let me start by the title. Normally we say that one size does not fit all, and every business is different. Every individual is different. But you said that there are certain principles which are the foundation of any business and can be adapted. So if you could tell us, how this title came about, and what did you want to express through this book?
Yeah, I guess, one has been in corporate world. All of you have been in corporate world for too long. And my observation is that two things always stand out in corporate world. One is that every time, irrespective of how successful you have been in life, if you face a setback, if you face a failure in any circumstance, the general favorite excuse is that one size does not fit all. And therefore, what we did was all wrong. We should have done completely differently. And we should have, thrown away whatever we have learned and relearned everything. This is, I've heard it just too many times. Every time something goes wrong, everybody wants to rewrite every little word of how to do business. And the second thing which I also felt, so some sizes fit all definitely comes from this frustration I have faced time and again. And I'm sure all of us who have been successful have been equally unsuccessful in many endeavors that we have taken. Because there was no way we could have been successful if we had not tried and failed and tried and failed and then succeeded. So one has faced this situation too many times. And I used to wonder what the hell is going on. We have been successful. In some areas, we've been unsuccessful. So let me try and figure out as to what's going on. And that's where this thought came up that some tactics could change. Some of the applications of the principles could change, but the basic principles of management remain the same. And that's where some sizes fit all came in. So that's one part of the group, which are of the complication I tried to tackle. The other also is my very firm belief, and I'm very certain many of you and the listeners and everybody would agree that there is, and this is at least my view, there is a concerted effort to make things very complicated in corporate world. I mean, we just excel in terms of jargons, in terms of presentations, which most in the audience, including some very senior people, most of the time just fail to understand. And the reason is that many of these are directed to and meant to be exactly doing that. Now, the reason for the above phenomena are that the individuals who are responsible for execution, I'm talking of the first one, when they say that, one side doesn't fit all. So those who were responsible for the project, when they fail, the easiest and the simplest excuse is to say that we did everything wrong. Everything should have been different. That's a very simple, easy solution or an excuse. For the second one, where there is complexity, I really think that is because most of the companies are really divided into silos. People do their discipline, they work at that, and we create specialists handling each function, each discipline, each activity which surrounds a company. Now, either these specialists don't know how to simplify the problem, That's one possibility. The other possibility, and perhaps a bigger possibility, is that they want to make it so difficult so that most people don't understand, so that their stamp of being an expert remains. And that's why IT, technology, one can understand, but even simple things like finance and marketing, right? Like finance. I mean, all said and done, you guys are very, very capable people. So I can't say that it's a simple thing. What you are doing is very complex. The only problem is we make it even more complex. So the interest rates become basis points. Now, nobody in the world understands basis point other than finance professional. But it is meant to be so that it sounds really, really good. If there's an IPO, if there is an oversubscription, we want to keep it, it becomes a green shoe. Now, somebody should ask, what the hell is a green shoe? Right? We are simply saying that there is an oversubscription and we could retain so much percentage of oversubscription. Just a couple of examples that we tend to make things very jargon oriented and very complex. Now, the theme, basic theme, as you have read in my book, is I've tried to tackle basically these two fundamental problems. And therefore, while the title is related to the first one, I think my book is full of and perhaps more concentrated on the second part. Because I'm a very firm believer in simplify things. I also believe that an expert is one who can make the most complex proposition, whether it's a rocket science or it's some huge astrophysics problem, so simple that a peon in the room should be able to understand it. Otherwise, he's no expert. So, keeping that in mind, I felt that the basic principles of management, which apply to every industry, irrespective of geography, irrespective of the line of activity, irrespective of the scale, I think I tried to highlight that in this book, and therefore I divided the book into three parts. The first is the fundamental pillars of management, and the second part is on specific disciplines like finance and HR and IT and so on and so forth. And third, and my favorite, is on the ways of working in any organization, which is again mostly common. You know, how to conduct meetings, what to do with your investors, what to do with competition, and so on. So negotiations. How do you? What are the principles that you need to keep in mind? That on some of these ways of working, which each one of us have to do in our day-to-day life. So that is what I tried to do with this book, and I do hope that the readers find it useful. I've been getting some good comments, but I guess I'll leave it to you to comment on how you found it.
So just to extend that discussion, I have normally found that very successful people, promoters, they are masters of basics, right? And even in your book, you mentioned the first thing is you should know what is your business model. How do you make money, right? And Raamdeo ji also keeps telling us, before buying a stock, you must understand the business of the company.
Correct.
Be able to say that how they will be able to grow, how they will make profits, and what are the main levers for the business. And you've also spoken about the business model at the beginning of the book. Now, just wanted to get your, wisdom from the time, you started when generally when an entrepreneur is at the start of the business, right, there are multiple things that you're doing on your own, and you also have to keep adapting depending on how the opportunity evolves. And who better to know this than you, because you were at the cusp of a revolution, right? We were moving from a landline to a mobile phone, wireless. The cost was exorbitant. I mean, I remember making calls at 16 rupees per minute. So, is the business model static? How dynamic do you need to be to evolve the business model? What were the challenges you faced at that point in time?
Yeah, I think in many ways I have dealt so much with Raamdeo that it must have rubbed upon me to know that if you want to succeed in business, the first thing you need to get right is your business model. And I always tell people, I said, look, what is happening in the world today on the internet companies in particular and tech related companies is at times insane. Not because they're in losses, that I don't mind. We have been in losses for, n number of years in the beginning, but there must be a revenue model and there must be a profitability model. What could differ is that in some businesses like consulting, maybe profit comes in the very first year. In some businesses like telecom, it comes in the sixth or the seventh or the eighth year, which is fine. But if a business does not have a revenue model to begin with, and if it has a revenue model but does not have a profitability model or a return on capital employed model or return on equity model, well, I think it's just a matter of time. My belief is whatever may happen interim, ultimately that business will collapse. So that is, I think, a very important piece, that you have to have a business model. In telecom world, the biggest challenge we had was that we were told that mobile is very expensive as compared to landline. That was the general belief. And as we got into it, we discovered something completely different. And the reason why we discovered it was because we were always searching for a good business model. And like you said, it's static. The search for business model is static. The business model can keep evolving and changing. But you have got to be constantly looking as to what your future business model should be. Let me give you one example. We were told that a mobile line costs $1,000 per subscriber at that point of time. And as we discovered, there was no line. Ultimately in wireless, there is no line to a subscriber. It's a cloud which is built, and depending on how much you as a customer want to extract out of that cloud, that is what the cost per subscriber is. And we ultimately realized that on a fixed line, your model cannot support a small customer, because the fixed cost of taking a wire to a customer was so huge that you cannot afford to have a 100 rupee per month customer. But on mobile, because the cost per customer was dependent on how much he consumed, therefore the cost is dynamic, and therefore you could afford to have a very small low end customer. And that gave rise to a completely different business model, where we turned the model on the head to say that instead of fixed line being the poor man's choice and mobile being the niche service for rich people, it became the other way around. Fixed line became the choice of rich people because they had to pay more money, whereas mobile became the means of communicating for Aam Janta. That was, just to give you one example of how focus on a business model can get you to the right answer.
Right. Sir, I mean, of course, there are many aspects of running a business that you've covered in the book, and I just wanted to touch upon a few of them which are relevant for our clients as well. So, in a scale-up phase, you've also spoken very extensively about how you should be financing your business, and many of our clients are entrepreneurs. They're running small and medium enterprises. Now, what we've seen is all the startups have basically raised a lot of equity money. I mean, the Series A, Series B, Series C. I mean, it's almost like you're on a high, right? You need capital, continuous capital infusion. But you very beautifully in your book I remember shown what is the difference between raising equity and debt. Of course, when the business is doing well, ROCs are good, debt will give you the leverage and ROEs can get expanded. But at the same time, if the business doesn't do well and ROEs are depressed, the debt can, act like a burden. And you've also given many insights, like, should you do capex on your own? Should you make it an asset light model? So what is your advice? How should an entrepreneur who wants to scale up look at the financing of the business?
So, Ashish, before I talk about the financing of the business, there is
Right.
a very intimate part of management decision making which would determine financing of the business. And that is what I call the business delivery model. So, once you decide on a business model, the next step you have to decide is, well, how are you going to deliver it, right? And that would determine, do you want people heavy Do you want capex heavy model? Do you want an outsource model where there is more of variable expense, less of capital expenditure, and so on? That is what I call the business delivery model. Now, your financing will depend on what model you choose. If you are a well-financed company or an entrepreneur, maybe you might say that to me, the better course is to put my own capex. Because naturally, once I cross a certain threshold and I have the ability to take the pain for the next 4 years, after that, the marginal return which I will get on further capital that I put in will be astronomical. Because my fixed cost will be covered and everything else which comes goes straight into the bottom line. On the other hand, for two reasons, one is capital, the second is convenience. Because you would have seen in the book, and this is real life Bharti example. We did a lot of outsourcing. We outsourced the IT system, and by IT system, I mean complete, comprehensive outsourcing of capex and the entire services. So we outsourced all that because one, we realized it needs just too much of capital, which we didn't have. Two, it needed too many resources who were not willing to come to us because we're a small company and no real talented IT professionals wanted to join us. The same went for network outsourcing. The O&M on network, on the way we bought capex, all that was designed to bring down the capex per se and bring down the investment in capex. For instance, on capex, we obviously had to buy the capex, but we worked out a system whereby we had to pay to the vendors basis the consumption or the utilization of the network which we had, which means the capacity which we utilized. We linked the payments, the physical payments to them, to that. So we paid as we earned. Now, that business delivery model was critical to determine as to how you finance your business. Because how you finance your business depends on how much financing do you need. Right. So that is, I think, very important to understand when you talk of financing a business as to what your business delivery model is.
Right, right. Just to elaborate further on that, you also made I think you were the pioneers in the sharing of, you given this entire case study as to how every telecom company used to put up its own tower and how it was so capex intensive, and the economies of scales were just not happening. And then there was a moment where I think you pioneered the sharing of towers, and actually these towers then got segregated into separate company, and it got listed, and now there are independent tower companies where all mobile companies have shared. It's a shared infrastructure. So if you can talk us through that, because this is probably this was quite revolutionary at that point in time when you made it happen.
So in some sense, Ashish, this is also a part of the delivery model, because there are two ways of putting up a network. One is you put up all your own towers. Now today we would have about 170, 80,000 towers. You could have put up your own, or you give it to a tower company. Now the advantage of giving it to outsiders is, one, the capex is theirs. Second, your running cost on an overall basis is much lower because they are sharing it with the others, and therefore their return on capital is much better. So this was a part of that. It was a complete waste of time and effort for a telecom operator, to my mind, to put up their own towers. This is one activity which should be shared, and I'm so happy that against much opposition, we actually pioneered it and went on to see that this pioneering effort is today accepted all over the world. Every operator in the world is today following this model as far as passive infrastructure is concerned.
Right.
So the advantages were too big. The only minus point which was hammered, and because of it there were too much opposition, is we leave competitive advantage. And I was able to demonstrate that competitive advantage is for a period of 4 months or 5 months or 6 months. Whereas you are going to live and run this business all your life. So even if you have to leave some competitive advantage for a little while, it's worth it. Second, it's a state of mind. If you are going to get another operator on that, please treat him as your large customer, right? He's going to pay you more money than what hundreds of customers on that site will be able to give. So I guess it's just a way of thinking.
Right. And the other thing, sir, as an organization grows and becomes larger, right, there is always a decision that a promoter has to make. Should he remain private? Should he go public? Now, you have argued in your book that going public brings in excellence, right? And many firsts to Bharti, where you had quarterly audited statements. You had very organized investor presentations, and you did argue that the moment you go public and there is a lot of if I may say, eyeballs on the company, and the market is also tracking it brings excellence to whatever you're doing. But we also see a lot of promoters struggling with this decision. So if you can, give us a framework, or I mean, both Bharti as well as Motilal Oswal, both are listed companies today. But if you could, talk us through that.
No, it depends. A promoter, is he wanting to have a money making machine which is kept private and in lockers out of the public gaze, or are you building an institution? It's a very simple question. If a promoter intends to build an institution and not a closely held, closely monitored company, then the only way is, as soon as you can, please list. Because listing brings professionalism. Listing is, like going to a hammam and bearing yourself naked, because now everybody can see you. Therefore, you got to be fit. There's no choice. All your blemishes are there for everybody to see, and therefore you have no choice but to excel in whatever you are doing. It brings transparency, it brings accountability. You are open to questioning by the public, which to me is the best thing which can happen to any management. And in this context, I include all promoters as managers. Otherwise, they should be shareholders sitting at home. Once they come to the office, they're not promoters. They should be professionals like anybody else. So if you're wanting to build an institution, the best way of doing that to me is list as soon as possible.
Right. The other interesting, passage that I read, and I think a lot of companies grapple with it on an ongoing basis, especially today in the world of disruption, is you've said fixing it when it ain't broke, right? And I think we are also grappling with it as a company. On one side, there are a lot of discount brokerages cropping up, which are disrupting the market. But there is a core business which is a cash cow, right? So companies which are at the cusp of disruption, how do they think about experimentation? At the same time, you want to milk the cash cow as long as it is throwing out cash. How do managers think about this?
Well, to be very honest, this is my most favorite part in book and in life, because I've seen too many people trying to fix things when they actually get broken. It's impossible. I'm sure all of us have experienced. Normally, when the times are good, we do not want to upset the apple cart. And we have often heard, don't kick a running horse and things like that, right? Then don't fix something which is not broke. But the fact is, what you can do in terms of transformation or improvement, which are of meaningful magnitude in anything which you do, can only be done in peace times. Right? You can't do it when you are struggling for survival. You just cannot do it. And I've given there the quote from this military thing where they say you're something like, the sweat that you do in
time.
So that's why I firmly believe that if your organization is getting too comfortable with the state of affairs, it's the job of the senior management to actually create some dissidence and some dissatisfaction and some fear in the company. Otherwise, you will make the company very arrogant. You will make them not think at all as to what could go wrong, what you need to do, take steps to defend for future. This I would rate personally as one of the most important tasks for the senior most manager in any organization.
Right, right. So, of course, sir, I mean, really given a blueprint, from how managers should start delegating as the organization becomes bigger, and, multiple, you covered literally all aspects of the company. But before I hand it over to Raamdeo ji, I just, had one last, not a question, but I wanted to seek your opinion on it. And I think it's runs common, probably even in our company. You've also mentioned that the value for money culture, right, keeps a company humble, right? Now, as a company scales up and becomes successful, how do you ensure that DNA of value for money? Because even here at Motilal Oswal, we are always taught to be humble, and that value for money culture whenever you're spending or whatever outlays you're making. How important is that? And you quoted Mr. Premji's example, which is a great example there.
I think this really reflects on how you want to build the DNA of an organization.
Right.
Because I've often seen companies which become successful, there is just so much of wastage of money for no rhyme or reason. If three people from the same office are going to a destination, there will be six cars waiting, at least three cars waiting. And that's so stupid because you have not bothered to just coordinate your travel plan. And these are small examples. But why I hate this kind of behavior is because ultimately it reflects into wastages on much, much, much bigger scale. So everything which you do, your mind starts working out, does it make a difference? And the moment your mind says it's not a matter of difference, it is a matter of seeing what is necessary, what is important, what is wasteful. I think, and again, this is a very difficult task. It's not easy. And again, this thing has to come right from the top. The top management of the company have to drill this in and put it into the DNA of the organization. Every time somebody joins new, you need to be vocal about it and say, this is how this company works. Make it a part of your interview procedure so that somebody coming in knows that this company does not tolerate wastage.
Right, right. Raamdeo ji, over to you. I'll listen to the two wise people now.
Thank you. Thanks, Ashish, for setting the backdrop. And congratulations, Akhil, for completing a book. I've read to be honest, I've read the preface and foreword written by Sunil Bhai. So, and I heard this thing, and it is what a, I mean, I know now after 20, 30 years into the business, we have seen all sorts of things and all sorts of companies I have seen and companies in the situations I have seen and how they have reacted. And even in Motilal Oswal, how we have come across a lot of management challenges. But what I could gather is that at every juncture you have innovated. You as a team, I mean, Bharti team has innovated. Whether because you started with a shoestring budget for a industry which really needed tons of money right from beginning. It was very capital intensive, and everything was expensive, and the paying ability of the subscribers were very low. Revenues were not there, but the capex was very high. So it was a very front-loaded kind of a business. So how capital investment heavy business you made it to become profitable, and I am the witness of that in the sense that from sitting from other side as an analyst, 23rd January 2003, I cannot forget the date. Your con call of December quarter, because you are also innovator in terms of not doing analyst meet and sending those quarterly dockets. I don't know from where you got that idea, but you were absolutely kind of a methodical quarter after quarter. In fact, when we got this time, we are going to follow Bharti and we are going to do detailed whatever we want to dish out. But that quarterly docket became the mantra for communication with the stock market. So you all started with a very detailed data. Of course, Infosys was doing somewhat, but I think Bharti became very organized in doing the quarterly, that docket, and on top of it, the con call. So on 23rd January, you all announced that we have broken even, and we are going to make profit from here onwards. And with little bit of, so that was a huge thing. And you all had come out with 45 rupees IPO, and the stock very quickly went down to 18, 19, or maybe even lower. I don't know. Fastest finger first. So everybody got stuck with that. And I used to, you would not be knowing, but we used to be in our friend circle. The bankers whom I used to know, they used to tell me that you guys don't understand how wireless company must be valued. I said, you guys don't understand how stock market works. These are two different worlds, and I was trying to figure out. See, I was very excited when I saw the wireless phone. First time I saw in New York, when I was waiting in one of the brokerages, and one very smart guy came, and he took out his cell phone, large one, and removed the antenna, and he called up, and one girl came and met, and he went away. I said, boss, we are waiting for 15 minutes. Nothing happened. This guy comes and takes out some machine, and that girl comes and his job is done. So, that then I asked somebody, what is this? He said, this is a wireless phone. That was 96, 95 or 96. First time I was in US. And from there, when I saw this Bharti Telecom coming with the IPO, I was fascinated, and the business of networks. So, so then you came out with that break-even point, and from where you made 7,000-8,000 crores profit in next 3-4 years. Now, why I'm taking such a long time? I'm just trying to set up. Last year, the loss was about 32,000 crores. So you have seen the heaven and the hell in last say 17, 18 years or 20 years of corporate journey. What's your thought? I mean, like when you talk about business model and profitability, how do we handle this as an investors here?
So let me, Ram, my God, your memory is just phenomenal. Yeah, you know the date exactly. But yeah, I think 2-3 things before I come to the current situation and how we handle and what we should be doing. One is, this whole thing that we will get every quarter a full audit. And the second, that we will come out with a quarterly report, which will not only give financial information, but will also give operational information, which any analyst would like to see to know what's going on in the company. Right? These were absolutely the first for any company in the world, not in India. Now, let me also tell you why we did it. Because you must understand, I didn't do it for analysts and investors. I actually did it for myself. Because I was very clear that if we want to run this company well, I don't really care whether we have done good, bad, or ugly. I just want to know the truth. I want to know the exact state of affairs which we are in. And therefore, the best way of doing that was get full quarterly audit done so that you know whatever is the situation, it comes out upfront. On the quarterly report, there was nobody who did this in the world. Why we did it was again for ourselves. Because I wanted all my managers to consistently see the performance quarter after quarter, a trend over the last 5 quarters on all critical parameters. And my belief, which I am so glad turned out absolutely right, was once they start seeing areas where we are not doing well, we don't have to do anything. They will fix it themselves. And so I used to be very active on the investor side those days. I used to always tell them that for God's sake, don't think I'm doing it all for you. I don't care about the share price, which is a fact of life. As management, as part of the promoter group, we did not care about the share price. When it came down to 19 rupees, we did not panic. When it went up to 1,000 rupees, we did not rejoice because fine, This is what the market values us, and this is what we must be deserving. But it's more for yourself. You should do all this. So one of the things which we also learned on the way as we grew our business was the power of transparency, the power of certainty of the results which you are producing. Because if you know your state of affairs right, everybody will respect you. More important, you will be able to respect yourself because you exactly know now what needs to be fixed, what needs to be done. And one thing which is, I mean, you guys are the masters of finance. We have learned over a period of time is that one thing which you must do is keep your balance sheet very strong. Because if you keep your balance sheet strong, when adverse time comes, and the adverse time normally don't come only for you, it comes for the industry. If your balance sheet is strong, you will have undue gains. Weak players will just go away or will completely melt, and the stronger players will become inordinately strong. And I think that was one mantra we always kept in mind, we always keep in mind, that whatever be the adverse circumstances, there is no way you can let your balance sheet weaken. So if you have to do more rights issue, if you have to do more perpetual bonds, you have to do any kind of fundraising where the DSCR remains very strong or the leverage remains generally very strong, that's an absolute must. And if you can do that, then the kind of boulders which have been flung on us, you all are witness to that in the last couple of years. Uh, you could only face it if you have a strong balance sheet. And I think we tried to keep our balance sheet very strong, well in time. Because the other beauty of finance world is everybody is willing to give you money when you don't need it.
Yeah.
As the moment you really need it, there is no money to be had. Therefore, it's very important to keep your balance sheet very strong, when you can.
So coming back to now, let's look at the little bit of crystal ball gazing in a sense that uh, this is, in fact, I was stuck in MB Valley in this COVID when it got struck, and I work full purely thanks to telecom. So so this is a new world now. I mean, completely defined by COVID event. A lot of facade of proximity to the work has been kind of completely demystified. So people can effectively work from anywhere. Of course, post-COVID, it will be kind of mix of anywhere to, again, going back to the tower or wherever you're working from. But I think it will be a different world in terms of work from anywhere. Now, in that situation, telecom, very high quality telecom, not only telecom, we have connectivity, but very high quality telecom will be very, very important. And and when we are looking at $5-6 trillion economy doubling in next 10 years, so the telecom intensity in terms of revenue has come down significantly. Today, I think total revenue is less than just about maybe 0.75% of GDP. I mean, 200 lakh crores GDP and total revenue of the industry would be more like 125, 130, 140,000 crores total. I mean, could be, but not definitely more than 150,000 crores. So in that kind of situation, do you think, how do you see the future for this industry? In the sense that the whole, I mean, if you look at everybody's balance sheet, it's completely broken. And so how do you, because of the intense competition in recent past, it has left everybody shattered. But how is the future? Let's forget, because that we can keep talking about it. There's no point. Let's talk about, I mean, what's your view? Because you have been telecom man sitting there. I mean, you can be just thinking aloud.
Yeah. So let's first of all start. I agree. Let's look at the future. Forget the past. Whatever has happened, we know it has happened. So we'll talk about it, but nothing in great detail.
Yeah.
I believe in concentrating and focusing on future. Now, when it comes to the future of telecom industry, two things are very important to understand. At least I'm very clear about it, that for all the technological revolutions which take place every day, there is only one common thread for each one of them. whichever field you may think of the highest revolution, whether it's a driverless car, whether it is all kinds of OTTs, all kinds of applications, there is one common factor. Each one of them need a communication network. Now, it's fashionable earlier to call it telecom network. Now we call it digital network. But forget about that. The plain simple fact is the telecommunications network is the common base for every advancement which is taking place in the world. And therefore, the future of this industry has to be wonderful. Because there is in every country, by very nature of this business, ultimately a limited competition. There has to be, because spectrum is limited, right? And in most countries, the only way communication needs of masses can be fulfilled is wireless, because there's no way you can take wire to every house. Therefore, fundamentally, this industry is blessed. It's a fantastic industry. The second aspect is we also see in the world that most of the services today are free. You look at millions of applications, absolutely no charge. And they all depend that they will become like a Facebook or a Google and have a lot of advertising revenue at some point. But generally, most of them are absolutely free to the customer. But there is only one industry where for every use of every application on the face of this earth, the customer pays. And that is to telecom companies. Because every time you consume data, you pay to a telecom operator without knowing it, without realizing it, and without saying I'm paying to a telecom operator. So that way, telecom is a phenomenal industry. There is a lot of evolution in this. You need speed, you will need more and more bandwidth. And for that, thank God, COVID hit us when 4G was such a hugely penetrated network. Otherwise, I really can't imagine, Ram, what would have happened to our country or to the whole world if 4G was not in a state of development what it was. And as we go into 5G going forward and so on, I think this connectivity part and this basic platform which you need for all the day-to-day workings in your life will become stronger and better. But that needs capital. It's a highly capital intensive industry, not helped with very high spectrum prices in the country either. So that is something where one has to make sure that while you have a situation where artificially the tariffs are very low today, ultimately there is no way they will not improve. Now, when I can't say, but instinctively, ultimately the tariffs have got to go up. We are at 160 odd rupees ARPU, is ridiculously low for the kind of services we provide. And it's not that the customers demand such a low ARPU. I'm sure this can easily be 300 and nobody will complain. It used to be that and nobody complained. But unfortunately, the circumstances have been such that it has been artificially low. So the fact that the future potential of this industry is huge, the need for this industry is huge, the business model is perfect where whoever may consume anything in life, he has got to pay a telecom operator. And the fact that what I believe is an artificial depression of this industry today in India, the future looks good to me. I'm an optimistic man anyway, as you would have seen over all these years. But yeah, I do feel optimistic.
But one of the aspects of the finance, I mean, current state of finance, I pulled out a number because I have to look at some numbers. So in 2007, when there was I made a lot of money in 2003 to 2007. And so in 2007, your margins were whatever EBITDA margins were, say 40% or something like that. Mm-hmm. But your asset turn was fantastic. Your asset turn was more like 1.25, 1.3. For 100 crores of your capital employed, you had 125 crores worth of sales. And then on that 40% you do, so you make whatever 50% some kind of ROIC and then rest all you can make it. Today, I don't know what's your guess? Where is your asset turn?
No, I don't guess. We actually give the capital productivity in our quarterly report. if you would look at it, it's a very transparent figure, a chart which you would have seen as a 3-line chart.
Yeah.
We very transparently give it. So you can see that it's in a dismal state today because the capital invested is huge and the revenue is, as you rightly say, a very low percentage of what it should be. Now, I don't mind it being low, but in that event, the EBITDA margin should be 80% or 85%. For instance, in the tower industry, right? It's very, very capital intensive because every time you put up a tower, you are spending lakhs of rupees. It's very capital intensive industry. But then the margins justify that capital intensity. The problem in the services side today is it is capital intensive and therefore the capital productivity in terms of revenue to capex and not capex to revenue, by the way. I look at it the other way around as to what is like you are saying. Revenue to capex is not where it really should be. It is definitely not where a 40-45% EBITDA margin business would demand it to be.
So what I'm saying is that it is at about 0.25. So from 1.25, you have come down to 0.25. So yeah, so that's the revenue to capex or total assets. So now, how do you see? Because I mean, 40-50% EBITDA margin is good, but unless you repair the asset turn, I mean, how? Because as a finance, I'm not able to figure out, because if you go from say vertical ARPU rise, your capex is not going to increase that much. Of course, there will be some more capex, but it will not go. So would you go, because that will first drive the EBITDA margin, and then only it can change the asset turn. So
two different things.
Yeah.
One is, as I said, the revenue is artificially depressed to my mind as I see the industry. As I said, the tariffs are ideally, and we have made it public that we feel it should be double of virtually where we are over a period of time. It can't happen overnight, but that's where it should really be. I mean, at 300 rupees, you're talking of $4, right? That would still be the cheapest in the world. And we gave something like 14, 15 GB per customer per month. It will still be the cheapest. We are today at about 10 US cents per GB. USA, just to give you an idea, is at 12 US dollars per GB. UK is at 6 US dollars per GB. So the difference is so stark that doubling of this means nothing, and that does fix a lot of things. The other aspect we have to see in telecom is it is a heavy fixed cost business, right? And therefore, every time your revenue goes up, the incremental EBITDA or incremental profitability to incremental revenue is and should be significantly higher. Those two aspects, I think, will hopefully repair it. I hope very soon, but if not very soon, I'm absolutely confident over a period of time.
Another thing is the disruption. I mean, this industry is not very frequently disrupted, but it does get disrupted. Like you are the disruptor to the fixed line, BSNL, MTNL. The kind of money they were making, now you guys were making after that. So from wired phone to wireless phone. Now, can it be that from wireless phone, can it be a digital phone? The satellite phones, which I think Bharti itself is trying to figure it out. Can it be I mean, I cannot fathom what will be the capacity of those phones. Are they meant for very remote and specialized area? Or can it be a usage for the masses? In the sense that you don't need these towers and all. Straight you flip the phone and straight you go to the satellite and use, I mean, that's the tower for you types. I mean, bypass all the physical infrastructure and you become satellite phones. I mean, is it possible that we are at the almost cusp of another disruption, like from IC engine to electric engine? So that kind of disruption is possible in a short while.
Well, it's a way of looking, I would say. What you call disruption, I would call it evolution of any industry. For instance, look at wireless industry. Now we had 2G, then we had 2.5G, then 3G, then Edge, then GPRS, then 4G, now we'll have 5G. Soon people are talking of 6G. Now you could call a 4G a disruption of 3G. You could call 3G a disruption of 2G. You
Sure.
could call 2G a disruption of the landline. And you will call 5G a disruption of 4G. But the fact remains, this is just an evolution phase. And the most important aspect is the whole benefit of this evolution will always come to a company which is already in that field and which is agile to these changes. And that is where I come back to my fundamental theme: fix it when it ain't broke. Keep an eye on what is developing and try to do something whereby the evolution doesn't take you by surprise, but you are well prepared for that particular evolution. Now, whether satellites will replace mobile phones, well, definitely not in the foreseeable future. It is nowhere, the evolution is not to that extent. But yeah, it would and it could replace a lot of B2B application like long haul services in areas where it's very difficult to lay down fiber or to put up sites. Certainly, it could do that. Maritime, aviation, many defense applications, absolutely, because there is no way you can put up a mobile network in the middle of the sea or in the air. There are many of such areas, but I would say disruption I don't expect, evolution I expect every day. Like look at electric vehicles. There is only one Tesla which came out of the blue and did it. Otherwise, the fact is, who were the best equipped to do it? The automobile companies, the ones who are making normal cars. But again, nobody tried to fix it because it wasn't broke. They said cars are selling. Let's not bother about introducing something which is an electric vehicle. And that's where I think people in an industry, any particular industry, whether it's your industry or mine, if we are agile to the evolution of that industry, I think we will be the biggest beneficiary ourselves.
And how do you, I mean, one of the things, two things we have found in the corporations, very, see, there, one thing in India, that to handle the success, mega success, has been very tough with the corporates. Very, very tough with the corporates. And I'm talking about even more, I mean, most of the corporates in India, if you look back, handling success has been very tough. Now, and the sources of troubles have been two. One is disruptive competition, and second is very bad capital misallocation. When they are very successful, of course, they end up doing things which are crazy. When they look back, they realize that a decade is lost in that process. Or maybe it is combination of both. You know, so in that situation, this industry has been replete with almost because the reward is so big. It's a 1.3 billion people. So it's a network kind of a society, and in that business opportunity is very large, and that brings everybody into it. So how do you see the competition? Because you're in a very unusual situation. You're competing with very heavyweight, very deep pocketed, but you are also one of the best in terms of you are very what you call very nimble footed and very innovative, and you know the business much better. You are close. You are very focused. You do your only business is telecom, and very customer centric. So how do you see the competition in that backdrop?
Well, look, you cannot wish away your competition, and the worst thing anybody can do is to undermine your competition or underestimate your competition. One absolutely must not, because if you do, is my belief as the beginning of your end. Because people, when they come into an industry, initially they may not be damn good. Ultimately, they do all become good. I mean, we have the example of Bangladesh team in cricket, and it used to be nowhere. Today, it is a force to reckon with in its own right. That will always happen, whether it's industry or sports or anywhere. A successful company, I always believe, if it starts feeling that it is, nobody can touch it or that nothing can go wrong with it, is the beginning of the end. And that is where I said it is extremely important that you have that power of D or dissatisfaction built from the top, where you make it into the DNA to say things are great, but things could go wrong. Therefore, please do prepare whatever you can in these peace times and in these flourishing, prosperous times. Whatever investments you need to make, you need to automate, you need to restrict the number of people working by putting more into IT. Do it then. And so once a company does that, I think that DNA will take away the arrogance of success and will actually start a culture where you can start looking with that success to say, what do I need to do to make it even more successful? Number two, realize that the success also is not only because of your ability to perform, it's also your ability how strong you are. And therefore, you will keep your balance sheet strong. So, what will you do? You will first make sure that this balance sheet is strong before venturing out and diverting money into other things, which is, as you rightly said, and you've seen, has been the downfall of so many corporates and industrial houses in this country.
Almost last question. Does telecom industry make money anywhere in the world? And serious money in the sense that there's a digital economy, as you said, nothing moves without connectivity, and everybody has to pay something, a penny, a 2 penny, dollar to the telecom operator. But even in mother of all the what you call technology country like US, where they pay $40-50 minimum to get connected, even there, and it's a fairly large country, 330 million population. So the telecom companies have not been they have not been Teslas, or they have not been the big kind of winners in the stock market. I think there are only 2-3 players.
There
But
are two different things, Ram.
yeah,
Winners in the stock market and making money. Tesla doesn't make money, but it's a winner in the stock market. Telecom companies in US make money but are not winners in the stock market because, as I said, for the amount of capital that needs to be deployed in that industry, the returns are not commensurate. So they're two different things. They make a lot of money,
yeah.
but the return on capital.
How do you change that perception? How do you make it? I mean, since you are the monopolist, I mean, as a supplier, there is no alternative to telecom. Either conceptually, I cannot live without that. And it's not that there are 20 suppliers. There are hardly 2.5, 3 suppliers anywhere in the world. And they have got a reasonably good pricing power also. In the sense that there is no absolute cutthroat that $40 is being given at $25. No. Why?
Studied as to how much is the return on capital employed of Verizon and AT&T, but yeah, it's pretty good. And there are obviously legacies, but yeah, they're good. But the problem is that since people do not know how much capital they will need to invest going forward, that is where the whole stock market expectation and valuation get dampened. Tomorrow, like Infosys or like TCS, when you know whatever they earn is profit because and cash flow because hardly any capex involved. Therefore, you can live with lower margins. You can assume that as revenues go up, the cash flows will keep increasing. You can't assume that in telecom, and that is the flaw. Therefore, one of the most important things to my mind in telecom is to promote a culture of sharing whatever you can, because that will bring down the capital intensity and that could completely change the fortunes of telecom companies. And yes, the mindset change will have to be that I cannot be controlling 80% revenue. You cannot. I mean, practically can't. In some countries, some people are able to because of the folly of the other players. But you have to understand that this is one industry where the governments would not allow you to be monopoly. And therefore, you've got to, in some ways, live and let live. And if you are a leader, you will have to give some little room to the opposition. And if you are a follower, you have got to demand that I need to come up. But I think the biggest problem this industry has is too much of capital intensity required on a regular basis. That needs to come down with, wherever we can share, whether it is passive, whether it is optic fiber, whether it is the submarine cables, whether it is certain elements of the active network, maybe the concepts of netco per se, where the operators become MVNOs and netcos become the capacity provider. I think this industry will have to think afresh as we go forward and we need to figure out as to how can we reduce capital deployment and improve the return on capital employed.
Akhil, thank you very much. I mean, I don't know whether I asked any question which I should have not asked, but it is always fun to discuss with you telecom, and and congratulations once again for writing this book. It will always be helpful to a lot of people who are starting their career. Thank you.
Thank you so much, Ram. I think it's been absolutely a delightful session. And you know how much I enjoy talking to you, not only on telecom, but the general economy and the general business as to how businesses can be done. And I'm sorry, I might have taken a lot of things from our discussions over decades. Maybe I have not given you the credit, but I'm sure a lot of credit will go to people like you who have helped me in harnessing my thoughts and trying and focusing as to what we need to really do. Thank you so much for all your
Gupta, it was a fascinating conversation. I was just hearing intently, and I'm sure even the audience was enthralled. But before I let you go, sir, there were a few questions from the audience. A lot of them have got answered because Raamdeo ji asked many questions on the industry and business itself. But couple, I just wanted to ask before we bid adieu. One is this whole concept of convergence, right? Earlier, there was a telecom company, there was a media company, there is a Netflix. But what is really happening is we are seeing business models converging, right? So how do you see that going forward? Because media companies are becoming network companies are becoming media companies. Everything is becoming digital. So how do you see this when you see the crystal?
If you are alluding to the fact that all these services ride on telecom network, yeah, that could be a good definition of convergence.
Right.
Otherwise, they are different. The same person could do 5 different things. You could run a mutual fund dealing with pure equity. You could run a mutual fund with pure debt. You could have a balanced fund, but there are 3 different products. Right. So merely because it rides on a telecom network doesn't mean everything is converging. Where is Netflix having its own network? Nowhere. Where is the telecom company having something like a Netflix or an Amazon Prime? Nowhere. Where do we have a network company having a company or controlling a company like a Z Entertainment, which is a content company? Not there. And if at all they have, my advice would be please keep it separate for a very simple reason. The whole DNA of a telecom network and the DNA of a content company are completely different. Right. I mean, in simple terms, a telecom company like I am with a blazer and, of course, with COVID, our ties have gone, but there was also a tie. And the content companies, you have one bunda here and you have some funny tattoo here and some funny tattoo. They're two culturally different companies. And we should keep them like that because they are meant to be like that.
So, in fact, my last question is on culture, sir. I mean, a lot of your thoughts in the book, and the chapters were probably envisaged pre-COVID. You published it recently, but how should one, look at culture, DNA? Is something changed in post-COVID world in terms of communication? Because we are seeing a lot of digital meetings happening. Of course, I'm also traveling now, and I see that real need for physical meetings. So when I go in front of a customer, he's delighted. People are really somewhere fatigued sitting in front of their screens. So how does a manager, let's say, of an organization think about this, hybrid world, digital, physical? How should he communicate better? And the culture. Think about the culture.
The hybrid world. The fact is that with COVID, because of the necessity, it has moved more toward the digital and remote world. What it has made everybody realize, at least it made me realize, something which I always believed in, but one was able to show it and showcase it, is people it is, I would love to meet Ram many times, but that's for pure fun. It's not that if I have to conduct business with him, I don't need to be sitting face to face with him because I know him for decades.
Right.
A new client, maybe yes. You need to meet him first physically. But people within the company, whether they're sitting in London or Nigeria or in Delhi, I find it very, very efficient to be doing whatever I'm doing with them remotely. Two, three things happen. When everything starts on time, everything finishes on time. There is always a pre-read. People come prepared. You invite limited people. And that is what, in my book, at least I've tried to point out the ways of working, that this is what should be there in every meeting.
Right.
The virtual meetings have forced that. So I would say nothing fundamentally different, except that we have realized that a lot of traveling is done for fun and not necessarily for business.
Right, right. Interesting. So it was a very, very fascinating conversation, and I think the way Ramdev ji, explored the telecom industry in terms of the story and the nuanced aspects was really the icing on the cake. And a lot of concepts you've explored in the book, but in your conversation, I really thought that it brought out a lot of finer aspects of the business, financing, the business model. So it was really a great conversation, and I think. It's a great end to the week, at least for me and most of our listeners. And I can already see a lot of messages, on our chat, and people are sending me messages directly as well. A lot of people have already gone and purchased the book on Amazon. So that's the power of digital. So many of them have downloaded on Kindle, and I'm sure it'll be a fascinating weekend read. So thank you very much, Mr. Gupta. Thank you, sir, Ramdev ji, for being part of the discussion. Really a
Thank
great.
you so much. And thanks to everybody who has joined on this call. I think it was really fascinating and wonderful. Have a great evening and a great weekend. Thank you.
Thank you,
Thank you.
sir. Have a great weekend, everybody. Thank
Thanks.
you, Ramdev ji. Bye.
Thanks.